Welcome to Breaking Banks.
Today on Breaking Banks, we go to space, and we go to space with Sultan Meghji, the first ever Chief Innovation Officer for the FDIC. Sultan knows the challenges of innovation in banking firsthand as co-founder of Neocova, a fintech providing secure, cloud-native, artificial intelligence-based software for community banks. Having known Sultan for many years, we went straight at it, debating regulation, innovation, inclusion, who's culpable for the slow pace of change, and even the FDIC's plans to regulate a branch on Mars. Okay, that last part was theoretical to prove a point, but we still talked about the FDIC having its very own Space Force.
So, Sultan, you've been in the role now just over 4 months, and I'm curious, when you really took it on and you were coming in and you were coming from the entrepreneurial side, let's just be frank, that most people within financial services, whether it be big banks or the fintech startups, when they talk about the challenges to be overcome, there's one of two places they point. Is either the legacy technology, but more often than not, the challenge of regulation, right? Not necessarily regulators, but regulation. And I'm curious, when you came to the job, what did you see as the problem to be solved that you said, this is what I need to go attack first?
Well, first off, Jason, thanks for having me. It's always great to hear your dulcet tones. You're the Jack Spear of the fintech community in your own way. And it's interesting. My joke to your answer is something to the effect of, it's not one problem, it's all the problems, right? There are a myriad of challenges across this sector is the glib answer. But the fact is, with Chairman McWilliams, we had this amazing opportunity, she and I did, to build a very specific vision about what we wanted to accomplish with this office. And it's really straightforward. We both have a degree of immigrant or refugee background. For her, it was directly when she came from the former Yugoslavia, and for me, my father is a refugee from Africa. And the anchor for both of us as we landed here in the United States was the American banking system. And if you extrapolate back, you look at the 20th century and you look at how the species operated, it's on the back of the American banking system. And we both look to the coming century as being one where not only do we need to continue to do that, but we need to find new ways to expand that. And we want to bring innovation into the banking system, not just into the banks, but into the regulatory community and the rest of the stakeholders. And so for us, that's the true north, is to ensure that we are bringing the best and brightest of American innovation into this amazingly important part of our universe, and then specifically targeting 4 areas. The first area is around inclusion. We do a lot of analysis of how households are banked, how many households aren't banked. We have this macro level program called the Get Banked Initiative, which I encourage everyone listening to this to look at. It's an amazing program designed to solve the challenges of millions of households and tens of millions of Americans not having access to the right banking that actually is meaningful and useful for them. And so on inclusion, we have a lot of different activities coming in. I'm sure we'll talk about those. The second one is around resilience. In the face of things like the Microsoft and SolarWinds hacks, you hear about ransomware as a service. We have new and interesting issues around climate. Back a couple months ago, a data center in Texas was taken offline and a bunch of banks went offline because of fundamentally a climate issue. There are all these pressures against our banking system's normal day-to-day operations. And so with resilience, we really do need to put a lot more energy into that. And it's not just cyber, but it's broader than that.
Yep.
The third is around amplification. Sometimes you hear people talk about the friction in the banking system, whether it's legacy technology or operating processes that make sense if you were dealing with binders and piles of paper, but don't make sense in a world where you're using tap to pay and other mobile payment infrastructures. There is a lot of amplification. We have an amazing group of people here at FDIC. I am on a daily basis impressed by not just their skills, but their sense of mission in terms of taking care of this system and the average American. But the fact is, there are a lot of people who will spend 45 minutes of every hour whacking away at a keyboard, and then 15 minutes actually being the experts that they are. And then you go into the banks, and Jason, you know this very well. You've seen it firsthand, the amount of manual frictioned activities that exist in the banking system that don't need to be there. And so we really need to do something about that. When you go from tens of transactions to hundred or thousands of transactions, you can't just throw people at problems anymore. You have to throw technology at it. And then finally, looking out over the coming years, artificial intelligence is here, digital assets is here, quantum computing is coming, new products and services are coming. The way we buy and sell things is evolving. And it's not that it's going to wipe out the old way of doing things, but it will augment it. And we need to be thinking about how to protect that future so that we in the United States continue to have access to not only the best banking products and services, but at the best prices and at a faster pace of innovation than we've seen historically.
So one of the things I want to pull out and talk a little bit more about, right, is this idea of we can't throw bodies at it. We need to throw technology. But technology itself, while it can, make some of this happen, a faster clip through automation, right? There's another part of it around, invention, if you will. One of the other challenges we have is we never really tend to take regulation out, right? It just piles up and piles up. Even, think of it like code. The cost of carrying, old code versus rewriting to modernize, can be the death knell for, startups, and it can be the death knell for, innovation, in the space when it's, too gummed up. Talk about, from a philosophical, approach to what do we need to do right size more than just automate? How do we actually begin to change the philosophy? What's your view there as an innovator?
Well, it's funny. When I landed, there was a joke that my title wasn't going to be innovation oriented, but disruption oriented. And so I want to throw a very disruptive comment at that, but I'll save that for the after dark version of this podcast at the end.
Come on, it's after dark somewhere.
Not here in DC. It's crazy hot today too. It's weird. The biggest thing that I think we need to remember is the regulatory system doesn't exist to tell people not to do things. It exists to ensure that things are being done in ways that don't introduce too much risk into the system. And I would make the case that there is more risk in the system today than there was 5 years ago, 10 years ago, 50 years ago. And so as we think about regulation and policy around regulation in the 21st century, it will have to evolve. And I think you make the case, quite correctly comparing it to code. But there is a lot of regulation out there that just needs to be tweaked. In my first couple of weeks here, I was taking pen to paper and tweaking some very specific interagency regulation around cybersecurity, which I think comes out in August. I'm really excited for that to come out because it's really the first thing that we've started to take more modern approaches to the policy work around that. And get rid of things that don't make sense. You don't want, I always use a car metaphor for this, right? You don't want to write a regulation for a carburetor and then try to apply it to a fuel injector. I'm a car guy, so that's a metaphor that works.
I'm going to borrow that metaphor. I like that one.
Awesome. So, the way you build a fuel injector is totally different than how you build a carburetor. Carburetor is basically 4 pieces of metal welded together in a certain way. A fuel injector is completely not that, right? And so we obviously are going to have to go back and tweak some stuff, and that's an ongoing process. I mean, that happens on a daily basis here.
But let's talk about the tweak, right, in this system, because that's one of the challenges that we don't often see a lot of tweaking, right? It can be hard to tweak. Pieces of this. And I think you guys have launched an essential program there and having office hours. It seems like that seems to be an important input that gives you the data to know what needs to actually, be adjusted.
Well, I want to thank you for highlighting that as one of the things we're doing to bring a little more transparency into some of these things and to ensure that those of us in the regulatory community continue to hear the awesome stuff happening in the market so that we can get a little proactive about this kind of stuff. I hate it when something lands on a regulator's desk and it's the first time they've ever heard about it, and I'll highlight quantum computing as something that, like, I can't imagine many bankers listening to this have a plan to implement quantum computing today. But by 2024 or 2025, I'm assuming they will. And so we have to get in front of that, right? And office hours is an example of that. I've put my email address in my social media profiles, innovation@fdic.gov. That hits my inbox. And we are very open to hearing from anyone about anything. We have a RFI on artificial intelligence that's just closing here that was interagency. We have another one that I put out on digital assets, a month or so ago, that's closing in the not too distant future. And you'll notice that as we continue to do these things, we're looking to have direct engagements. I think I've done probably 40 office hours since we announced we were doing them. I did 8 in one day. That was a long day, I'll tell you.
Yeah.
But I learned a tremendous amount, and that data flowed right into the rest of the organization, and it touched a bunch of different things, from consumer protection to examinations to research to operating processes for our technology org, and keep building in that transparency, building in that information so that we can keep closer up to date with what's going on in the market, so we understand where our priority should be and where we should be looking at putting a red pen to something when we need to. There are thousands and thousands, if not millions, of pages of regulation out there, and some of it goes back decades before a lot of the technologies, a lot of the models we're talking about existed. And in some cases, they were written incredibly well, and they stay fresh very well because they were thoughtfully written by people who were thinking more strategically about what's going on. In other cases, there's other stuff where we have some work to do.
So one of the challenges can be that the part that iterates more quickly tends to be guidance that can come from the FDIC, right? Easier to change than legislating where it needs to go. But the other problem
that's potentially a massive understatement.
Potentially, I'm willing to stand by that statement. Prove me wrong. But guidance itself, while quicker, can be hard to apply. Right, because it doesn't drill all the way down. And one of the complaints we often hear from banks and fintechs is it's being applied differently. So how do we actually do the kind of rapid change that you're talking about and that the market really needs, but also maintain a level of consistency, around message and around, what does the exam and what does the enforcement look like?
It's a great question, and it's one of those things where regulation is one tool in the toolbox. And for us in the market, I have always said that you don't want to just you don't want to pick up a hammer every time you need a tool in your toolbox. Sometimes you pick up a screwdriver, sometimes you pick up a socket wrench, whatever, right? And around getting normalization, especially around high iteration technologies, I'm not sure regulation is the right path. I think you can look at something like standard setting. So last year, FDIC put out an RFI on a standard setting organization and some ideas around what we might do. We got incredible feedback. I think it closed a month or two before I even started, and we were still collating and reading responses and looking at other activities. And I'm excited for us to move forward on that, because wouldn't it be great if, instead of regulating, you must have API X or data model Y or something like that has some age to it because it's tied to a specific technology, like a relational database or XML or whatever. But instead, we get to a place where there are standards. And as long as everybody conforms to the standards, then those standards can stay fresh at the pace of technical innovation. And we can just pay attention to the standards and make sure the standards are, kind of aimed in the right direction and participate as an equal stakeholder. I'm really excited for more to come out on that. Sadly, I don't have a lot to talk about beyond what I just said around that. But I would say, don't just think about regulation or legislation as solutions to some of these activities. Think about standards, think about public-private partnerships, and look at places where that's been successful previously. I mean, the dawn of the internet, we spent a lot of time doing public-private partnership and standard setting work, and it led to incredible pace of innovation in areas where, historically, if you just let the government kind of run the government process, it would have taken 5 or 6 years, and instead you get activity in 5 or 6 months.
So what else, you said these are some of the areas that aren't talked about enough. What else did you uncover, within the FDIC, both as initiatives and other tools that we need to be amplifying to the rest of the market in terms of, where organizationally the chairman she's taking, us as an industry, but leading from the front with changes to the agency and the different initiatives?
Yeah, I mean, there are so many interesting ones, and I'm such a fan of the chairman that you've given me kind of like what's the best of the best I get to talk about. So let me talk about a couple. So the first is she and I, even before my first day, zeroed in on really wanting to move the needle on inclusion, both at the individual level as well as at the small business level, especially women and minority-owned businesses. And so we've announced a tech sprint around inclusion, specifically looking at the last mile, and we're incredibly excited for registration to open up very shortly for that, and that program to go. That's going to be awesome, because that's going to be the first time that what we've said to the industry is, here, listen, bring in your best ideas and let's figure out what we can do about that. We did a little bit of work around this, around supervision modernization and our rapid phase prototyping program, where about 30 organizations, raised their hand to show off a couple of great ideas. Again, really cool stuff with that. We're going to start talking about here in the near future. So what we've done is basically say, listen to the market, especially as it relates to inclusion, show us your best, and we're being very open and very broad about who we want to participate. It can be a community group, it can be a baseball team, it can be a bank, it can be a fintech, it can be some combination of all of the above. There's a lot of great innovation in the market, and we really want to foster it and embrace it and cheerlead it so that people understand that innovation isn't just a risk management program. It is also an opportunity to grow their balance sheets and enhance their customers, et cetera, et cetera. So that's one that I get very excited about. The second I get excited about is our minority depository institution activities. And so we've announced that we're going to be launching an MDI fund. This is going to be really exciting. We've got some cool stuff coming on that here in the next month or so. We've got a couple of anchor investors. Now, obviously, we can't run a fund, we can't manage a fund, but we can certainly make sure that a really interesting fund that adds capital to this very critical component of the banking sector gets done. And we're very excited to announce that. And that's going to be a kind of a first of its kind thing. Who would have thought a federal regulatory agency would foster the creation of a fund to insert more capital into a specific type of institution? And then the third is this fundamental notion that American innovation is the best thing for the American economy and for this industry. And that there are a lot of institutions that are doing some amazing innovative work. We want to make sure that they do it in a safe and sound manner, that they manage innovation in a mature way, but that we normalize the fact that change is happening and will continue to happen. And that the thing we don't want is there to be a class of banks in this country that are what we call digital have-nots, because they're trapped by legacy technology or they just don't have that capability. We want to remove that fear. We want to remove that. I've heard from a number of banks that are like, well, when are you going to allow us to use AI? And I respond with, when have we ever said you're not allowed to use AI? Right? You'd have to do it in a mature and thoughtful way. And that's one of the great things about our regulatory system. We're incredibly open about it. If you have an idea, you come to us. We want to hear it, because we know that when the American banking system prospers, our nation prospers, and globally, we prosper even more.
Well, the prosper, one of the other challenges to call out is often it's the incumbents that are scared of the change because they like that they are part of that segment that is prospering right now, and others beginning to prosper often can feel like losing. I forget who came up with that quote, but it was very insightful, something I'd read last year. And so how do we get the existing incumbent banks comfortable with this kind of change and the idea that we all prosper when we help others prosper?
Well, I mean, Jason, you and I do it every day of our lives, right? You have your megaphone, you make this case, and we're trying to do the same thing. I think the chairman in bringing this to the forefront has done a fantastic job. I mean, you don't bring a guy like me into a role like this if you're not looking at making change, right? And you don't position it in this way where you make that case. And I am very happy to spend a lot of my time having one-on-one conversations with bankers who are, to one degree or another, afraid of this, and to one degree or another, not sure what they need to do next. And there are many opportunities, whether it's talking to us or other regulatory agencies, to talking to groups of banks, such as the one that you're associated with, and others, that allow us as an industry to remove some of that fear. We're seeing a great next generation of leadership beginning to emerge amongst a number of these institutions. Guys closer in age to you and me, Jason, than we've seen previously. And I know you and I aren't exactly spring chickens, but we're not retiring anytime soon, and it's great to see that. So there's a cultural evolution happening as well.
Yeah, I love the new kind of fintech crowd. Calling. I hear this all the time. Oh, you're the OG. And like, how can I be the old guy? I'm like, I'm not old yet. And my dear friend Lindsay Davis, wrapping her arm around me virtually and saying, "Sadly, you are. Sadly, you are." So I guess we need to come.
I very sadly, begin a number of my speeches by saying, I got my first paying job in technology in June of 1991. Which is 30 years. So that makes me feel remarkably old.
So for anyone listening, whether incumbent fintechs, an innovator from overseas looking to enter the US, what do you think the next 5 years looks like in our evolution as these things are beginning to take place? The programs are changing. We've gone from this monumental approach of, hey, let's wait until something really bad happens, then go do the monumental approach to regulation, into this proactive and iterative, type. What does that mean, over the next, I don't know, you pick your time horizon, but longer than a year, but shorter than a decade?
Oh, shoot. I hoped you had said 12 years because then I could say, well, that would be the 100th anniversary of the FDIC in 2033.
Okay, fine, 12 years. So what does it look like for the centennial?
Yeah, so I talk about this in two ways. And so the first way is talking about augmentation, right? Branches will continue to exist, but more opportunities for banking services will continue to evolve. And there'll be some institutions that look exactly like they did in 1985, branch-based, very human-to-human kind of interactions. But then you'll have, banks that are far down the other side of the digital spectrum, not just digital only, but maybe mobile only, or maybe maybe in some sort of metaverse only environment, right? And the fact that I get to talk about metaverse banking or space-based banking now that there are crypto nodes in orbit, that just, I feel like I'm in a William Gibson book or something. It's fantastic. But you'll see that entire spectrum, and in that spectrum, in that federated environment, we have such protection, we have such opportunity. I am very excited to be in a place when no matter who you are as an American, no matter if you care about your own personal finances, or you have a small business, or you're doing a side hustle, or you're an NFT dealer, or whatever, you can, at the touch of your fingerprints, have the broadest possible options in terms of banking products and services that are backed by the full faith and credit of the US government, as they should be, and have the ability to allow you as an individual the freedom and compelling opportunity to do whatever you want.
You heard it here first, people.
Yeah.
Sultan has announced Space Force is being launched by the FDIC, a fleet of examiners coming to a planet near you.
So it's actually hilarious, Jason. I made a joke in a speech a while ago that Elon Musk was going to put a bank on Mars, and one of our fairly senior examiners pinged me on this town hall meeting and said, "What's the per diem we would get to go to Mars?" And I watched our COO just get this look on his face, like, you had to mention this here. Like, come on, like, what would be the per diem of examining a bank on Mars? That's one of the questions.
I mean, given the length of the trip, you go once for the exam and hope it doesn't take too long.
Well, you go once every 2 years and you're there for 10 days. So, $18 or $19 billion.
Oh, fantastic. How are you working with your counterparts? I had the pleasure of seeing you on stage with folks from the OCC and CFPB, and even some SEC. That is somewhere every agency now finally has an Office of Innovation. What does that collaboration look like? 'Cause that is also a new stance. Speaking at the FDIC conference in 2019, the fact that you could see the OCC and the FDIC co-hosting something, was a phenomenal cultural change, in approach.
Yeah, I'm a huge fan of that. I love that we are we are moving down a variety of these different activities, whether it's the innovation offices directly working together or just the agencies working together. The thing that I love about being an employee of our nation's government is we have so many amazing people in so many different places, and we're all on the same mission. Now, we might have different statutory authorities or different legislative structures we operate inside of, but we work on a daily basis with our peer entities at the other FIREA agencies. And we're blowing up each other's phones all the time. Right before I got on this podcast, I was talking to someone at one of the other agencies. And it's not just the regulatory agencies. We spend a lot of time looking at how to be efficient stewards of the resources that we have. And so we look at things that other agencies are doing, whether or not that's, in cyber areas with parts of the intelligence community and Homeland Security or DoD, or it's looking at how to efficiently, run transformation programs and evolve parts of our operating model through organizations like OPM and GSA. It's an amazing group of people, and everybody understands that, there's a lot going on, and the amount of things we as a community have to do to support our nation is growing and evolving. And I just love the fact that there are chief innovation officers or comparable actors across all of these, because I know I can pick up the phone and there's going to be somebody who's fundamentally thinking about the change in the same way I am. And just the humans that are in some of those roles, like Beth Knickerbocker at OCC, is awesome. Like, she's just a wonderful human being, and it's just great.
So if someone wants to stay abreast of all of the changes and the things coming out from the FDIC, how should they, make sure they're in the know related to all of these initiatives?
It's great. We actually have a social media program. So I would say LinkedIn and Twitter is the place to go. Hashtag of Team FDIC or FDI Tech, if you just want to put it in your search for announcements and stuff like that. We've obviously got emails. We do all the normal old school email marketing and stuff like that. I think social is probably, if you're wanting to kind of catch up and get the TLDRs, social is the place to go.
Fantastic. So really appreciate you spending your time. Look forward to the FDIC launching an Instagram and TikTok account to really catch up.
Not TikTok. Yeah, no, not TikTok. Maybe Instagram.
Fantastic. Sultan, thanks for taking the time to share with us today, both the vision of the future, but also the near-term things that are in flight and making a difference already.
Awesome. Thank you so much, Jason. It's great talking to you.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.